Hello guys, welcome to Mind Your Bull. This is Ricky here, and today in this video I'm going to share my secret trade plan that I am currently following to take the trades. So I would like to share it with you guys so you can follow my strategy and follow my trade plans, and you can also become profitable trader. All right. So in this video, let me break it down how I'm going to describe you my trade plan. So first thing first, I'm going to identify the support and resistance levels as per the pivot levels. So if you haven't watched my video about the pivot levels, how you can draw these lines or how you can get these lines on your chart, please go watch my previous video. I will leave the link in the description below so you can watch that video first. So you need to understand what is pivot. So that's why you need to watch that video first. Okay. All right. Now, second thing is the trend of the day that I would like you to know, that to identify the trend for the day. And then you need to, the third part is where you need to plan the trade and where you can take the entry and how much you should, take as a profit. Okay. And fourth is your risk management, like how much you should risk when you are targeting your trade. Okay. So the risk has to be according to your account size. So whatever your current account size is, so the risk should be according to that. Not if I am taking $100 risk and making $200 to $300, you shouldn't do the same. If your account size is smaller, you should take small profit. Okay. And then the last, I will discuss how the trade journaling, how create a small a Google sheet or Excel sheet where you can record your trade of the day with certain information that can help you identify any of the mistakes you make or improve your entry and exit plans for later day trades. Yeah. So let's get into the video. All right. So first of all, the first point is try to identify the support and resistance level. Okay. So basically, I use the pivot level as my support and resistance level. So this red line represents the pivot point, the middle price level, the average price, which is called pivot point. Okay. So if the price is above, we take normally we take buy trades. If it's below, we take sell trades. But as per the pivot level, if it's crossing the pivot down, then we take a short trade. If it's above or crossing above, then we take the buy trade. So this is the idea of taking the trade on these levels. Then we need to also identify the trend of the day. Okay, so if for example the Friday on 24th of Jan, the trend was clear, that it gave a really bullish move in the Asian session, and it even break the first resistance level. So when I woke up and when I was looking at the chart, and for before the London session is going to open, so I already planned that I'm going to take a buy trade, and it has to be above the first resistance level. It has to be the area where the most buyers are. Okay. And then my trade plan is, it works according to the time frame I follow is 15 minutes. Okay, now let me show you my trades of this week so I can explain you better what I'm really talking about. Okay, so this was the Friday plan. Okay, Friday was, it's completely bullish, so it was really easy to take the trade. Okay, now on Thursday, as you can see in the Asian session, that the price was consolidating and it wasn't moving up or down as much. But when the market opened in the London session, so this was the candle for the opening candle, and it closed bearish. So that's why if it has closed the green, then I would have entered the buy trade over here. But it closed bearish, so I waited for the green candle for the confirmation. So once I had the confirmation that okay, the price is going to go up, because this price, this support line represents the first support. Okay, so price always bounce from the supports. Okay, so the pivot is, because the price was below, the pivot is act as a resistance. But when the price is above, for example on Friday, if the price would have come down, it would have act as a support, just like on Wednesday. As you can see, price was consolidating in the morning, and then it came to the pivot level and it took the support from there. And this was the opening candle, and on the first opening candle, when it closed green, I entered the trade with stop loss just below that candle and targeted 1:3, nearly 1:3. So that was my trade for Wednesday. And on Tuesday, I took two trades on Tuesday. First trade was I entered bit earlier before the market has opened. I just entered like 15 minutes before. Basically, when I saw this candle forming a really bearish candle, and it closed two 5-minute candles was closed red, and it closed below the pivot level. So then I decided to enter the trade. It was a bit aggressive trade, you can say, but I really feel confident around these levels when I'm taking the trade. So that's why I took the trade. And after taking the trade, you can see it planned out well to my plan, but it did not move much. And also, I did not targeted, a really big target, because I knew the reason is, first of all, you need to, when you are trading something, like I trade GBP USD most of the time, so I know how much price a GBP USD moves in a day. So it was already moved 90 pips. So the maximum GBP price moves in a day is 120 pips. Okay, so it has already moved 90 pips, and this was a bounce. So this was kind of last attempt to the short side. So this was my last moment to take the trade for the short if I wanted to. So that was the reason. So I entered the trade, and I only targeted this price level, because as you can see, the price was already moved 90 pips, and this was the 100 pips price momentum. And taking waiting for 120 pips to move, that would be a foolish move from my side. Okay, then again, I took another trade when the New York session was about to open, and it did open, and then I waited for the green candle to close above the pivot level, and once it did close, and I entered the trade, and just with the 10 pips stop loss, it really came close to my stop loss, but the price bounced back from the 22,700 price level and did not hit my stop loss. So I got lucky, and also I got my take profit target. So it's not the luck. It basically, if you trade these levels, okay. So if the levels you draw, let me just hide these levels, and let me hide these drawings. Okay, if you draw the levels as per a lot of people on YouTube videos show you that how you should draw the support and the resistance levels, so which basically doesn't work much. As you can see, if I draw my lines like these, if I draw every, no, most of the time they will teach us like we have to draw the supports on the swing lows, and the swing highs will be our resistance. So as per these lines, if I go and trade for a day, that I might not get any trade. I barely get any trade where I can enter or exit the trade. Okay, so this basically taking the trade with these lines, with these support and resistance, it's really hard. Okay, so I most of the time I would miss out my many trades, and I won't be able to take those trades if I use these lines as a support and resistance. So that's the reason I do not use this, because it doesn't work most of the time. It only works, yes, if it only works with the swing trades. You can have the direction. You can understand the direction of the market, and then you can enter the market. For example, in the 4 hours chart, we can see that the direction of the market is uptrend, and we can just, when there is a dip, we can enter the buy, and then wait for the next high to make, and then we can exit from there. But yes, but that comes in the swing trade. As a retail trader, as a day trader, like swing trading is not what we really are good at, and most of us don't believe in swing trade, as we know that we have the swap charges, and we have other things to look at when we are trading the forex. So that is the reason, like, I don't look at the 4 hours chart or any 1 hour chart. I only look at 15 minutes, but I only follow the pivot level support and resistance, because this is the level that day traders should use for their day trading. Okay, now this you can call it a scalping trading strategy, and this is I'm not into the terms that people use for their trades and all. So I'm not sure what you should call or what I should call these trades. But for me, risking 10 pips and getting 20 or 30 pips or 40 pips is what I need. Okay, 1:2 or 1:3 ratio is more than enough. And this week has been a really good week for me because all the 6 trades I took was winning trades. So this was the Monday trade. Monday the price was hovering when I opened the chart, and the price was hovering around this R1 level, the first resistance. Let me switch on the levels so you can see what levels are there. Okay, now this R1 is the first resistance, P is the pivot level. Okay, so when the price was rejecting this resistance, and I waited for the red candle to close. So this was the before the market was opening, this was the last candle it made. And then when the market opened at 8 o'clock, the first 15-minute candle was closed red. So this gave me the confirmation, okay, the price is going down. So where I entered the short trade, and just above this pivot level, which is the support level, I just exited. I targeted this area only. I did not target it for this because see, this pivot is a strong support level. As you can see in after that, when it came back, it really took this as a support, and the price really shoot up from there. Well, this candle is made so big because of the news. So normally I do not trade news, and I would like you as a new trader, so avoid these trading these news events, because most of the time your price won't get triggered at all. For example, if someone has entered any short trade over here and put it their stop loss just above this, and entered this and applied here as a take profit, but when the market shoot up really like this, and even if he has put it their stop loss here, this stop loss wouldn't trigger here. It would trigger somewhere around here or here, because that's what the news does. Because when the price shoot up and the slippage happens, and in that slippage you might lose a lot of money. So that's why around the news, do not take any trade. Okay, after the news, after 2-3 minutes or 4 minutes, you can take the trades, but before 2-3 minutes in this gap, do not, before for 3-4 minutes and after 3-4 minutes, do not enter any trade while there is a news. So as I think you may all know that where you guys can check the news. So this is Forex Factory, and that's the most standard place where you can check the upcoming news and everything. So here the red folder significantly tells us the impactable news for the forex, which forex pair would have the chances of the news impact. Okay, so if for example I trade GBP USD, so I always look for GBP and USD news. So if I trade, sometimes I do trade JPY USD. So if there is any news, I skip those timings, so I do not take any entry. Okay, so how you guys can take the trades. So basically the trade timings is at the opening timing of the London session, which is about 7:45 or 8 o'clock is the open time. The main open time is 8 o'clock, but you can enter somewhere around in between after 7:45 also you can enter the trade if the trade is nearby the support or the resistance. That, as you may have noticed, or mostly my trades are near these levels. I do not trade in anywhere in the middle, only on these levels I trade. As you can see, all my trades are nearby these levels. There is no trade around here, there is no trade around here or here, only at this level. Okay, only at this level. On Friday also only at this level. Okay, that is where you should always look for trades. And I know it will take some time you to master this strategy, and by following, as you can see, if you take your time and learn these levels and how the prices react from these levels, you can easily copy, and you can make $100 $2,000 every day from a single trade. You do not have to take any other trade for the whole day if you learn this level. So I prefer not to take any trade. I prefer to take only one trade or two trade maximum. If the two trade is something like if the price is moving really quickly, and if there is a room to the price to move to 50-60 pips, so grabbing 20 or 30 pips in between, then I definitely go for it. But otherwise I leave it, but only if it's near these levels. Okay, only if the price is around these levels. Okay, so that is the main idea of pivot point trading. Okay, so also after now let's talk about the risk. How much risk you should, if your account is for example, if you have $500 in your account, you should not risk more than $30 or $30 to $35 per trade, because that's how you can preserve your capital, and that's how you can grow your capital. Because if you are risking 30-35, then you will be able to make, if you take 1:2 or 1:3 ratio, you can make 70 to $100 somewhere in between per trade per day. So this is something, if even with your small account like $500, you can achieve that. But first of all, before entering the this trades, you need to master these key skills, key levels. Okay, so first, if you're starting out on the taking trades as per my plan, which I'm sharing with you right now. So if you want to take the trades like this, you first of all go for like very minimum, bare minimum quantity. Just take 0.01 quantity and just risk like $1 or $2 and target $3 or $4. Okay, just for practice purposes, take these trades for 3-4 weeks, and then after, once you feel confident, yes, you can also take the trades around these levels. So basically, two things you need to make sure, that when you are about to take the entry, you must enter in the London session opening around opening timings. Okay, or you can take like half an hour or 40 minutes later as well, but if the price is nearby the support. But if it has already moved away from the support, then do not enter, like do not enter in the running trade, because you might not get your target. Then you might not get your target. So that's why you need to have some practice in this key levels, how you can trade these. So managing the risk with as per your account size is really important. And then the next thing comes is the trade journaling. That's the very important for any trader. For this, so this is the my trade journal for the last week. Okay, so on Monday, I identify my support and resistance. Yes, identify the trend. Yes, I will go through with the days as well. Okay, so well, I already seen the Monday, the price was bullish, but I had to take the short trade. The reason, because it has already reached to the resistance level, and I waited there. If the price is going to break, if the price have broken, I would have entered the buy trade, but it did not. The price came down and it closed the red and gave me the signal of the short. So that is the reason I took the short trade. Okay, and then I also took the screenshot, as you can see here. I'll just click here and you can see the screenshot of my trade. So why I do this, why I keep these journals, this is the reason is the, well, now as you can see, the well, I have good trades, but I used to have bad trades as well. So where I used to enter before the confirmation, and because as you can see, if I don't see these red, if I don't wait for the 8 o'clock time or 7:45 candle to close, I would have entered the buy and just predicted, okay, the price is bullish, it closed the green and it's going to go up, and I should enter right now and do not waste my time. But that's the wrong move, because I have to wait for the another 15-minute candle to close, because 8 o'clock is the actual opening time, and the pre-opening time, which is the 7 o'clock, it sometimes most of the news, the GBP release is at the 7 o'clock timings in the morning, but that does not really help with the direction. The only direction that follows, the market follows, is the 8 o'clock timing when the market is open. Okay, so I'll share my this Friday trade as well. Friday, like the price was going down, I was looking for a short trade. If the price have taken a sell from here, I would have entered the short trade, but I waited. Once this the candle 8 o'clock candle was closed green, so then I thought, okay, it might not get down. So then I waited for the, okay, if the price breaks up and comes back and take a support here, then I will enter the buy trade. So then I waited after like 15 like 2-3 candles closed, and I saw that the price is not really moving down, it's going up. So then I entered the buy position, and but I did not targeted the big target, the big move target, because I knew the price is going down, so it will eventually come back. Okay, the price won't go for longer, the longer pips. So it will move, it will reverse from some point. So that's why I just targeted very small pips. So it was only like 20-22 pips, my target. So basically all my trades, as you can see, it's not really big trades. I don't believe in taking 40-60 pips or 70 pips. I don't believe that. The strategy I built around these key levels, around these pivot levels, is helping me with risking 10 pips or 12 pips maximum and giving me around 20 to 30 pips. As you can see here, on Monday I risked 10 pips and gained 20 pips, so it was a good trade. Again, on Tuesday I took two trades where I risked 11 pips and 10 pips, and in the both trade I got 30 pips. So which was in first 2 days of the week I was in a good position. Then even if I have lost all three trades on Wednesday, Thursday, and Friday, I would have managed to have end up the week in a green because I already closed like 80 pips profit. Okay, so even if I lose 30 pips over here, I would have ended up with the 50 pips profit. So that's why trading in a discipline and a proper risk management is really important. And by journaling this, like what when you are planning the trade, what you are looking at before the market is opening, what you when you are looking at the price, so you need to enter here by writing this. Making this sheet, it will help you to understand the market, whether you are identifying the trend properly, whether you are identifying the support and resistance properly, and what type of trade you end up taking. You took the short trade or you took the buy trade, or then when you take the screenshots, so with the screenshots it will help you to identify whether you were right or wrong. Okay, if you were wrong, what went wrong, you can easily identify that later. And if you start following these key levels, and if you need any help with the trades, you can always comment me on the video, or you can email me from my email ID. I will definitely help you out, guys, to understand these key levels. And this is very important. Support and resistance, you should not ignore it, and you should not randomly draw the lines, as I showed you earlier in the video, that you should not randomly place your supports and resistance like that. It's not really worth it. Okay, so if you start taking trades, so the idea is, if the price is above the pivot, go for buying. If the price is below the moving down the pivot, just go for the short trade. So that's the idea. If the price, for example, on Friday the price was very far away from the pivot when it was about to open, then move to the next level. So according to the next level, take the trade. For example, on Thursday the price was far away from the pivot, but it was at the support level. So when the price opened, it was taking the support, and with this confirmation of green candle, then I entered the trade. Okay, so you need to identify these key levels, and as per these key levels you need to take the trades. Okay, when you are taking, if the price is moving down from the pivot, you should enter the sell trade, and if it's moving up, you should always go for the buy trade. Okay, but also you need to make sure that, like, GBP USD pair is something that it on average days it changes 70 pips, but on a trendy day it changes around 100 to 120 pips. So this kind of information you must have when you are trading any pair. For example, if you go for Euro USD, so Euro USD average change pips is like 40 to 50 pips, and the trendy days is like 70 to 80 pips. Okay, so these are the things you need to understand when you are entering the trade. And if you talk about the AUD USD is also it moves around 40 pips average in a day, and trendy days it moves around 70 to 80 pips, so it doesn't move more than that. So you must know the pairs when you are trading. So the logic is same in all the forex pairs. If the price is taking support from the pivot, go for and buy trade. If price is taking the short, it's moving down from the pivot, go for the short trade, and you will definitely get your target. And always place your targets before reaching the next line of support or the resistance, because sometimes or like it won't go all the way up or all the way down to those levels. So it somewhere between, it will move reverse from some certain price levels. So that's why, so you need to target only like 20 or 15 pips or 20 pips or 30 pips. You need to check that according to the pair. So the GBP USD, I can tell you exactly how much pips you can target. So over here you can easily target by risking 10 to 15 pips, you can easily target 20 to 25 pips. So I hope you understood my idea of trading. If anyone has any question, like how they can identify these key levels, if they are to understand these levels, if you are feeling any difficulty, you can always comment on this video and I will reply to you. Okay, so I hope you liked the video, and please do subscribe to my YouTube channel, and it's fairly new, and I would really love to have the support from you guys so I can share more and more valuable videos with you. The next video I'll be sharing is about crypto trading as well, where I take my BTC trades. Okay, and see you in the next video.